Do this right now to increase your cryptocurrency profits. Now, this ends soon. Now, what if I told you there was a way that you can get up to a 37% return or more guaranteed? Which I know it's big words, I get it, but when it comes to investing, there's no such thing as a guaranteed returns, right? But there is a little known loophole that you can use right now, and it's only available now until the end of the year. And if it's done right, you can make up to 37% profit or more instantly. So in this video, I'm going to explain what this little known loophole is, how you can make up to 37% profits or more instantly. I'm going to show you how to calculate the math to determine what your profit potential is, the dangers that you need to be looking out for, and what to expect with this next year and beyond. So let's go. All right, welcome back. If you're new to the channel, my name is Mark Moss, and I make these videos to change the way you think about money, because almost everything that you have learned is wrong, like there's no such thing as a guaranteed return, but that is wrong. I'm gonna show you a way that you can get up to 37% returns or more profits in just a couple of quick steps. Now, real quick, before I tell you that, I do wanna let you know that this is one of many things that you can do before the end of the year to increase your profits and, more importantly, set you up for next year, for 2022. This is the time of year to do all these little things and make the plans to make next year the best year of your life. And really, yeah, the best year of your life. So if you'd like to find out what these additional tips are, I'm having a free presentation, a free training I'm doing. There's a link down below where I'm gonna go through about, 30, 45 minutes of training and show you all these different things that I'm doing, what you can plan for, what you can do, and how you can make sure that you finish 2021 strong, and then most importantly, make 2022 the best year ever. Build that foundation to build off of. Free training. There's a link down below. All right, now jumping right in on this tip, what we can do, how we can get a 37% return or more. Well, the first thing is just money saved is money earned, right? That's the first thing. So I say that because, right? If I can save money, it's the same thing as making money. Now, I'm not a big fan of Dave Ramsey, who I'm sure you've heard of. His whole thing is get out of debt, cut your expenses, stop going to Starbucks in the morning. That's ridiculous, all right? There is such thing as good debt and bad debt, so definitely don't take on bad debt, but there is good debt that you should be taking advantage of. But more importantly, man, if you're trying to get rich, trying to cut out your coffee in the morning, you're never gonna make it. Focus on making more money. I'm not for cutting out your latte in the morning. I like my coffee, but it's not necessarily wrong, but it can be done a different way. So it is a good idea to cut expenses. If I cut expenses, it's basically the same as having more income, right? If I don't spend the money, if I'm not forced to spend it, it's like I have it, especially things that are forced to spend on. Of course, this saying is famous by Benjamin Franklin, penny saved, penny earned. But really, taxes are our single biggest expense that we have. Now, it's not that you can opt out like going to Starbucks in the morning. The taxes are either being withheld from your paycheck, or you have to file them in your tax return. And so they are our single biggest expense. So if I could lower my taxes by 37%, it's basically like making an extra 37%. And if you're watching this channel, most likely you're gonna be able to do this, all right? So the first thing is cryptocurrencies and capital gains. So when we talk about capital gains, there's really two ways that we look at them. There's long-term capital gains and there's short-term capital gains. Now, to get just kind of a big, broad overview of capital gains, we can go to Investopedia, and we can see that basically when you sell a capital asset for more than its original purchase price, the result is a capital gain. So whenever you buy a capital asset, that could be a stock, that could be gold, that could be real estate, that could be cryptocurrency. Whenever you buy it, and then you sell it, that's a taxable event. Now, if you make a profit, in this case, you sell it for more than you bought it for, then you owe tax. If you sell it for less, then you could save money on the taxes. Either way, it's a taxable event. This includes stocks, bonds, precious metals, jewelry, and real estate, and cryptocurrencies. Of course, it's important to keep capital gains taxes in mind, especially if you dabble in day trading online. So if you're on Robinhood and you're trading options back and forth, or you're doing cryptocurrency trading, it's all the rage these days. Each one of those transactions is a taxable event, and you have to keep track of every single one and file that at the end of the year. Long-term capital gains are derived from assets that are held for more than 1 year. Short-term gains are, of course, things that you held for less than 1 year. So that's really the breakdown. If you're trading, then of course, those are short-term capital gains. If you buy it and just hold it, you don't have to really worry about that as much. All right, so that's it. Now, the second piece is everybody's tax situation is different. We're not all in this together. I also like to say that I am not a tax professional. I'm not your tax professional. You should have one. So go consult with your tax advisor about this. But when it comes to taxes, we're not in this together. We're all taxed differently. So if you make at these certain levels, you're taxed differently. So if you make, let's say $84,000 a year, you're paying 22% federal income tax. If you're in California, you have extra taxes. If you're in Texas, you have no state taxes. So we're only looking at federal right here. The top tax bracket, if you make over 430, you're at 35%. If you make over 500, you're paying 37% to taxes. Now that's ordinary income. However, capital gains are taxed differently, long term. So if it's short term, if I've held the asset for less than a year, then it's just taxed as ordinary income, short term. If I hold the asset for more than a year, then it's taxed as capital gains, long term capital gains. And if you're in the tax bracket up to about 430,000 a year, it's only taxed at 15%. If you make over 500,000 a year, it's taxed at 20%. All right, so in this regard, we're talking about short-term capital gains. That could be long-term capital gains either way. But you could be paying up to 37% on your taxes. All right, and like I said, you could have either a profit or loss on this. So let me show you how this works and how you can use this. All right, there's something called the wash sale rule. You might have heard this before. At the end of the year, one of the reasons why December is a very volatile month for investing is because a lot of people are doing tax loss harvesting. Well, both they're taking profits. So especially if you're CEOs of big companies, you've had record years in the stocks, you're taking profits and you're booking some of those big bonuses this year. But also if you have losses, you can sell those assets and take those losses to offset other income. All right, and then you can buy them. So there's something known as a wash sale rule. Now, a wash sale occurs when an investor sells or trades a security at a loss and within 30 days before or after buys another one that's substantially similar. So if you buy Tesla stock and then sell it, and then you turn around and buy the Tesla stock again in less than 30 days, that's called a wash sale. It's not allowed. You can't do that. If you're doing it with securities like stocks, you have to wait at least 30 days. The wash sale rule prevents taxpayers from deducting a capital loss on the sale against the capital gain. So the reason why, if I bought Tesla at $1,000 or XYZ stock at $1,000 and I sold it at $500, there's a $500 loss. And if I went back and just bought the stock again, I could use that loss, but they don't allow you to do that. You have to hold it for at least 30 days. However, this is where the loophole comes in. However, we can see that the IRS classifies virtual currencies like Bitcoin, Ethereum, and Dogecoin, and even Shiba Inu, so basically cryptocurrencies, the IRS classifies them as property, not as securities. This is the key piece here. This means that crypto investors are subject to the same taxes on capital gains and losses that apply to other investors, but with one important difference. They escape one rule that applies solely to financial securities, and that is the wash sale rule. So basically what it's saying is, because cryptocurrencies are not deemed to be securities, they're deemed to be property, they're not subject to the wash sale rule. This tax loophole, which might soon get closed by pending legislation. I'm going to show you that. So this is about to get taken away. This is your chance to do it. It's a security loophole. So let me show you how it works and how much money you can save. So if I want to break down the math, let's just say hypothetically, using round numbers, that throughout the year in 2021, you had $20,000 of profit. Hopefully you have a lot more than that. You have $20,000 of profit, all right? So, and let's say that you're also in the top tax bracket at 37%. So remember, that means you make over 500 grand in the calendar year. So we're just using these numbers hypothetically. You can adjust them for your own situation. So you have $20,000 of profit at a 37% tax rate. Now, if you're in California, it's gonna be higher. And that would be that you would owe $7,400. That's how much you owe taxes. You're gonna have to give Uncle Sam that money, and who knows what they're gonna do with that money, something that I probably don't approve of and you probably don't either. So here's what you could do. If you, let's say that you bought Bitcoin at its peak at $69,000 a few weeks ago, and right now it's sitting around 49,000. So let's say for easy numbers, you bought it at 69,000 and you sold it at 49,000. You now have a $20,000 loss, all right? But what you can do, you bought the Bitcoin at 69,000, but Mark, you said to never sell. I don't want to sell. And it could be Shiba Inu, it could be Ethereum, it could be Dogecoin, whatever coin you want to substitute, whatever cryptocurrency. If you bought it here, you can sell it here, and then you can instantly rebuy it. You can sell it and buy it instantly. You don't have to wait the 30 days. But what you do is you bank that loss. So now in this example, I have a $20,000 loss. So I have my $20,000 profit I started with, minus my $20,000 loss that I got from this wash sale by selling and buying the crypto, equals 0% money owed on cap gains. So I saved $7,400 that I would have had to give up, and now I have $7,400 to take my family on a vacation or something else cool like that. Something better than what the government would be doing with that money. So you can instantly bank money into your pocket. Here's a chart so we can just see, if we look at Bitcoin, we can see it was up here. Now it's down here. Anywhere, any of these cryptocurrencies that have this situation, you can take advantage of it. Now, the one thing we know, they say that the two things that are certain in life are death and taxes, and we do know that more taxes are coming. We can't get away from taxes. All we can do is try to minimize them. Now, you are not legally obligated to pay any more taxes than you're obligated to pay. So use these things. They are there for you. Again, I'm not your tax provider or professional. Go consult with your own. But we do know that more regulation is coming soon. We can see that the crypto is basically flying under the radar at this point because, like I said, it's still technically considered property. However, the new head of the SEC, Gary Gensler, he said every cryptocurrency but Bitcoin seems like a security to him. That's what he said. Those are his words, not mine. And so he said even stable coins and cryptocurrencies are all securities. And so remember, the wash sale applies to securities. So look for these to be reclassified next year. Part of what is happening in what's called this Build Back Better program. And so I'm going to show you that in a second. They want to reclassify all this as securities so they can regulate it more, and that wash sale is going to go away. So your chance to make that money is now before the end of the year. Now, like I said, we know that we can't get away from taxes. More taxes are coming. A lot of it is buried in this Build Back Better and this infrastructure plan. As we can see here, this $3.5 trillion reconciliation bill that they're trying to push through. And just alone, they have to figure out how do they pay for this $3.5 trillion. And so they're trying to put all these new taxes into place to pay for it. And they think that if they target this wash sale rule, they've targeted specifically, if they can get rid of this, they think they could raise almost $17 billion over the next coming decade. So that's why they want to get rid of this wash sale rule, raise that $17 billion. There's other things they want to do. I'm not going to go deep into it, but they want to restrict nodes and developers. And so basically this whole DeFi space could come under attack. They also want to broadly use this word brokers. The word is too broad. We don't know exactly what a broker is. And they basically want brokers to all have to collect KYC, basically tax information. So if you send and receive crypto, or you have a piece of software that sends and receives crypto, or your decentralized finance helps people send and receive crypto, they want it to be defined as a broker and be required to collect KYC information, know your customer, so they can continue to get additional tax. In addition, they've said they want to hire 80,000 IRS agents. 80,000 IRS agents. I'd rather send those people down to the border, but no, they're going to be chasing you. If you make over $600, they want to come after you. And why? Because the government is broke. They have no choice. So you can expect to see taxes continue to go up, more agents harassing you to get those numbers. Now, this is just one of many tips that you should be looking at and probably doing between now and the end of the year to make sure that you finish this year strong. And most importantly, start 2022 right, make it the best year ever. I wanna give you more tips that I use personally every single year. I've been doing these every year. So I'm having a free training. There's a link down below. Come hang out with me. I'm gonna show you my playbook. I have a workbook that I'm actually gonna be able to give you, that you'll be able to fill in all the blanks and create your own template off of. So I'm gonna give that to you as a free gift just for coming hanging out with me. There's a link down below. Other than that, let me know what you think about the wash sale rule. Is it something that you could use yourself? Give me a yes or a no down below. That's all you gotta say, yes or no. And of course, give me a thumbs up on this video if you like it. If you don't like the video, that's okay. Give me a thumbs down, even though I don't see the numbers anymore. Thanks, Biden. Other than that, that's all I got. To your success. I'm out.